So back on Friday, we had one of the worst market performances that we've seen in a while, and in what can only be described as a bear market, that's actually quite a bad thing. We saw the S&P 500, the Nasdaq, the Dow Jones, pretty much every other index as well, drop to their lowest lows of this year so far, the lowest points of this bear market so far, and everyone was wondering what would happen as the markets open back on Monday or today to see if we would have some kind of rally, maybe a bull trap, or if we'd continue falling. Now, the peak for all of this panic, for this hysteria, and for the markets dropping off seemingly a cliff was that we got new inflation data, and in short, it was really damn bad. We'd been told for weeks and even months at this point that inflation had peaked, that it wasn't even an issue anymore, that everything was fine, that prices weren't going to continue to rise, and you're daft if you think they were. But no, the data came through, and inflation rose yet again to 8.6%, a new 41-year high. Now, the even worse thing about this is that this is taken into effect and into account the base effect, where we've now had high inflation for over a year. So that year-to-date inflation level, well, that's going to start to ease off, and it isn't going to rise as drastically as it had been over the past 6 months or so, even though inflation is still seriously bad. Let's not forget that every day, every moment that inflation remains above that 8% mark, actually that means prices are continuing to rise at that level, and that's a very bad thing. No, in short, we haven't seen the peak of inflation yet. We were told that we had, but those experts who have been wrong time and time again over the last 2 or 3 years at this point, well, they were wrong once more. Now, over the weekend, there were a lot of people wondering what was going to happen come Monday. Most people didn't really think it was anything good, but the crypto markets obviously don't close. And over there, it was a sustained bloodbath. Just a couple of weeks ago, and Bitcoin was happily sitting at above $3,000, and Ethereum was sitting happy at above $2,000 as well, and every altcoin was about 20 to 30% higher than it is today. But as you can see from this chart here, well, those good times have well and truly lost us. We are at really goddamn low levels for the crypto markets, the lowest that we've seen in about 2 years at this point, and it doesn't seem to be getting any better. Now, the only problem with this chart is that it's only looking at crypto over the last day, and so a 13% drop may not sound actually awful for Bitcoin, but the truth is it's been a 13% drop followed by a 13% drop followed by a 13% drop to get to where we are today. Basically, take a crypto at random and there's a 99% chance that it's fallen off a cliff recently. If you're invested in it, you've probably lost money. Even if it's only a paper loss, it's still a loss. And actually, with the monetary environment looking so poor, with inflation so damn high, and with investor sentiment collapsing as well, well, crypto probably isn't going to do much better in the near term. Now, we actually had some relatively good news for crypto last week. We had the Ethereum testnet go live and everything was fine. And that's getting closer to taking Ethereum to the proof of stake consensus method, which most people will agree is good news, but it pretty much just got ignored. And Ethereum has been one of, if not the worst performer during this little flash crash. And that is for a couple of different reasons. Now, if you'll remember, a couple of months ago, we had another crypto market crash as Luna and the stablecoin UST lost its peg, the entire ecosystem collapsed, and about $60 billion worth of wealth was lost instantly, followed by about another couple $100 billion across the rest of the crypto markets as risk sentiment deteriorated overnight. Now, what is this chart I'm showing you here? Well, this is the chart for Lido staked ETH, which is supposed to have a peg of 1-to-1 with Ethereum. As you can imagine, people have been a little bit worried about this recently, and even more so over the last day or so because it broke its peg. It used to be sitting relatively happy at about a 96% of where it's supposed to be, which isn't even good, let's not forget. But more recently, it's dropped even further and is now closer to 93%. What this basically means is that if you owned this asset, you may think that you own 1 Ethereum for every 1 ST Ethereum that you have, but the reality is you have lost 7% and there is really no way to get your money back at this point. Now, this is a little bit of an unorthodox stablecoin because it's not pegged to a fiat currency like the US dollar, but on that front, I'm afraid the crypto market is actually no better at all. This here is the chart for USDN, and as you can probably tell from the name USD with a letter at the end, this is supposed to be a US dollar stablecoin that's supposed to sit at exactly $1 per value. You can see over the last day, it has not done that. It was sitting at about a 99% of its peg earlier in the day. It's now sitting far closer to 97. It's lost its peg. if you thought this was a stable project and that your money would be safe with it, that you would maintain that $1 to $1 peg, well, you have now lost money. The real big problem is that this isn't the only one this has happened to. There's another problem just like this, near identical as well. Here we have USDD, yet another stablecoin supposed to maintain its value of $1 to $1 US, but again, it hasn't. About 12 hours ago, it sort of just dropped off a cliff, fell down to lows of 98 and is now sitting closer to 99, being incapable of regaining that peg because there's no confidence in the systems that back these coins. Now, as this happens and crypto has been falling, a lot of people have been getting liquidated. A lot of people have been losing money. This article here suggests that 180,000 traders have seen their Bitcoin long positions liquidated because they're underwater with their debts, with their margin, with the way that they trade. They've been a little bit irresponsible. They were too bullish on a risk on asset during a poor investing environment. And now collectively, they're out by $500 million, which is not a small amount at all. Now, the really major problem with all of this is that it isn't just affecting coins, but it's affecting the companies that make up the decentralized finance space. And in particular, it's affecting Celsius. Now, this is a little bit odd for me to be talking about because last week I interviewed the CEO and founder of Celsius about the state of the crypto market, unfortunately, a few days before all of this drama happened. As a result of me not being able to predict the future perfectly to a T, I wasn't able to ask about any of these problems, but problems have started to emerge, and for Celsius, it really doesn't look good at all. As the markets were crashing, as crypto assets were losing value across the board, everyone who used Celsius got an email or they got directed to this memo here, and in short, it's not good news. Celsius have announced that due to extreme market conditions, they're going to stop withdrawals, they're going to stop swaps, and they're going to stop transfers. Basically, if you had your money with this company, if you had your coins with this company, you no longer have access to that money. Celsius is just closing the door, they're locking it up, and they're not letting you in to access your assets. And this is extremely worrying for a lot of people, and that's totally understandable. This should be worrying. It's bad news. They also said specifically that they're doing this because they want to put themselves into a better position to be able to fulfill all of their obligations so that everyone can get their money over the long term, but this doesn't inspire confidence in Celsius, so I can't really imagine how well this is going to go. Now, the rest of this article is really just a lot of doublespeak, saying that they're doing this in the interest of their users, that they don't want to do this, that there isn't a bank run and that their liquidity is fine, that there are no real problems, but the evidence speaks against this. I'll link to you all down below in the description, the full letter if you want to read it. Frankly, there's not an awful lot to be said. It's basically just the fact that Celsius is no longer a functioning company. Your currency, your coins is no longer safe with Celsius, and this is just really bad news. And it's caused a continued crash in the prices and the values of crypto because it's exposed the insecurity with an awful lot of these companies. Now, why is Celsius in this trouble? Well, it's not entirely clear because as with every company like this, there's always a little bit that goes on in the shadows, but we do have a pretty solid grasp on what we think is happening and what we think the problem is. Now, the first claim that a lot of people are making is that firstly, Celsius was hit poorly. It was hit hard by the UST and Luna crash. A lot of people claimed that Celsius had an awful lot of UST or Luna on their balance sheet and that they were underwater, that they didn't have the money to pay back all of their investors if they all tried to withdraw at once because of the money that they lost with UST. I've also seen a couple of claims that said that they actually put their money into the UST stablecoin themselves purposely, and then they put it on the Anchor protocol, which is supposed to give a 20% annualized return rate. Of course, that really didn't work out too well because the value of UST collapsed 90% overnight, and so most of that money was lost. Now, Celsius, the company, and Alex Mashinsky, the guy who I interviewed the other day, well, they actually both claim that this isn't true. They claim that they didn't have UST on their balance sheet. That's what Alex said in the interview with myself. And then in other examples, he said that they weren't significantly affected by the UST crash, suggesting that they may have had some on their balance sheet, but apparently it wasn't a lot. Most people in this space don't really believe that at this point. The other problem, though, is that Celsius has obviously tried to put their other assets at work as well, including the Ethereum that they hold, by firstly staking it on the Ethereum network itself, which locks those coins, those tokens up for a long period, about a year, and means that actually they don't have access to them for that time. And they do this in exchange for a yield, for a return on their investment that they hope to make a profit out of. They've also done the same with that stablecoin pegged to one Ethereum that we mentioned earlier called staked ETH. But again, actually that's lost value too. So if Celsius have put lots of their wealth in this staked ETH and then use that to try and generate revenue and generate a profit, well then that would be very bad news as well, because that coin also lost its value. As a result, when people started to ask to withdraw their assets from Celsius, Celsius ran out of assets. They didn't have the money to buy back these assets on the open market to give them out to people, and so they had no choice but to just shut everything down to prevent a run on the bank happening, although frankly, this is sort of already a run on the bank. Now, there are an awful lot of articles that go into a great deal of detail about all this, but frankly, none of them know exactly what is going on. Everything is shrouded in mystery. Here's a tweet here from Alex Mashinsky where he reiterates this claim that actually Celsius isn't affected by the UST and the lunar crash. He said that they had minimal exposure. That doesn't perfectly line up with what he told me the other day on our interview. He said they had none, so there's a little bit of grey area there, and there's a lot everywhere else as well. A lot of people have done work to try and list every single wallet and every asset that Celsius have. And according to those people, who again can't be 100% sure that these wallets do belong to Celsius, but they're pretty sure they are, well, that would suggest that actually Celsius was hurt by UST and Luna more than they claim as well. Now, everything isn't absolutely awful because some other companies are trying to come to the rescue as well. Nexo, which is a company which works in a very similar space to Celsius, they also do a lot of crypto lending and crypto loaning type things. Well, they are apparently far more backed, a little bit safer, a little bit more secure, and they have made an offer to buy out Celsius to incorporate them into their company, so to save their investors' funds, to stop there being this run on the bank, and to hopefully save the day. As of yet, though, I don't know what Celsius have said to this. I somehow suspect that they aren't going to be willing to actually get rid of this, to jump out of this. I suspect they want to maintain their independence, even if it comes at quite a high cost. What this does show us, though, is that actually there are other options here. Celsius isn't doomed to just outright failure. Acquisitions could be in order. Mergers could be in order. We could have some kind of other company like Nexo or maybe someone else come to the rescue and save the day here. Now, one more problem that I want to point out is that actually Celsius haven't been perfectly open about all of this, and they haven't painted themselves in an awful lot of glory. Here's a tweet that came out literally just one day ago where a Twitter user said that he had heard from friends that people are having trouble getting their money out of Celsius and that this is all a little bit worrying. And specifically, it's similar to the lunar crash that we had before. Alex Mashinsky, the CEO of Celsius, came back and said, no, this is absolutely false. This is FUD, fear, uncertainty, and doubt. And by the way, I hate the term FUD because often it's a way of just ignoring valid criticism. And it seems that actually that's what this was here as well. Alex even went so far as to claim that this guy is being paid off by Celsius's opponents to try and get people to worry and crash this company. Literally one day later, and here we are, and it turns out that actually Celsius have shut down every single person from withdrawing their assets. So this person who... So actually, Alex Mashinsky was wrong. He either lied or he didn't know what was going on. Either way, those are both worrying things, and nothing really is good here. Here we have an example of one of those people who are very educated and big in this space, Kobe, come out and say why he thinks that Celsius is having a lot of problem. This one related specifically to the Ethereum staking that they're making with the staked ETH and then the Ethereum that's staked within the process itself. And he's basically suggesting that this might be one of the reasons that Celsius has this liquidity problem. Finally, I also think it's probably prudent to suggest and to just tell everyone that actually this isn't Celsius's first trouble with the law or trouble with regulation, and it's not their first sign of trouble in general either. Back a few months ago, their CFO was arrested in Israel, and for a time it was all kept on the down low. There was a court order or a law mandating that we weren't allowed to talk about it, the journalists weren't allowed to publish about it, but that was lifted. And yeah, basically the CFO of Celsius is being detained and being investigated and charged with fraud regarding the way that Celsius is run. This is obviously not good either. As of where we stand right now, the markets are probably likely to continue to crash. There is an awful lot of fear out there, and not just in the crypto space. At the time of me making this video, it isn't quite market open for the US, but there are futures And Nasdaq futures are down by 3%, S&P futures are down by 2.5%, which means we're likely at brand new lows of this bear market when the markets open. By the time you watch this video, I wouldn't be surprised if it's actually a fair bit worse, with the S&P 500 down below 20% and the Nasdaq down below 30% year to date. What we do know for sure is that this story isn't over. There's going to be trouble that comes from this. It's not going to just be solved overnight until Celsius open up their withdrawals again and people are able to get their assets back. Well, this is going to continue to stoke a lot of fear, to stoke a lot of flame. I do expect the crypto market to continue to fall, to be frankly, not in a straight line. Of course, there will be bull rallies along the way, bull traps as well, sadly. But really, the monetary environment is just so overwhelmingly negative that risk on assets cannot outweigh that, no matter how effective or how great they may be. If you enjoyed this video, then make sure to like, comment, and subscribe to bless the YouTube algorithm. It really does help. If you want to join our exclusive community, then check out our Patreon. You get access to our Discord server and extra content like access to my portfolio and buy and sell alerts for all my own investments. Also, make sure to check out the link in the description to Masterworks. It can help you protect your portfolio against market turmoil through fractional shares of art from world famous artists. Art has historically proven to be uncorrelated to the markets, so it's a really valuable resource with the markets falling every week. There's also a link in the description to I Trust Capital, which helps you to invest in crypto through your tax-advantaged IRA, which could literally save you thousands. If you, like me, think crypto going down is a buy-in opportunity, then now is the perfect time to join I Trust Capital. Thank you all for watching. Stay stoic. Until next time.